Back hit it again. Nice. What's up, everyone? How you guys doing? This guy's crazy with the turtle soups, huh? Suits the name. I'm doing well, thank you. So just want to do a quick stream today. Kind of the same thing, I guess, as yesterday. Chill out, tape read a little bit, Q&A, backtest, psychology stuff. Not a whole lot of tape reading now. After that setup, I'll go over it quickly and then we'll get into the rest of it. But basically, this will also be recorded. So basically, we had, first off, go to the 4 hour today because we had such a large range. We've got the market maker sell model starting to build here. And I mentioned yesterday on stream that we didn't have any stop runs, internal stop runs, within the market maker sell model on the hourly, right? We didn't have one up here. Down on the first stage, we really kind of just sold off aggressively down. And there was no internal stop run. There was nothing up here or down here. So we wanted to see it trade up into this gap, which is the one I had outlined. The FOMC came in and we eventually traded up all into the premium inefficiency up here and then sold off. Now, when you see something like this on this time frame, the hourly chart, we know that this quick up and this quick down is going to be a wick on higher time frames. So if you go to the 4 hour, there's your 4 hour wick, and wicks are inefficiencies. All right, so if you go down enough, this is what a wick looks like on every single time frame. So sometimes you only see wicks on the 5 minute or the 1 minute or the 15. You can't go far enough down where you'll see fair value gaps that print within the wick, like something like this. This 1 minute inefficiency, you think, oh, we filled this gap, but it's not true. There's technically more inefficiencies that's overlaid on top of this. So if you go to the wick, looks like this on the 4 hour. Then on the 1 hour, you got the clean up and down. Then on the 15, now you see the inefficiencies within the wick. So if we take our most recent dealing range between our low and high, right, we extend that out. Now we have our premium and discount levels. And you can see right up here, we have a premium inefficiency. So what do we know about our profiles that we normally look for in the morning in terms of liquidity? Well, normally we want to go from ERL to IRL or IRL to ERL. And both of those setups will either be a premium to sell side, or sell side to premium, or discount to buy side, or buy side to discount. And both of these sell side and buy side are ERLs. These are both IRLs. And you know these are both going to be time based, and these are going to both be on your 15-minute or hourly preferably. So now we can start dropping in our lipstick here. We have a premium imbalance on the 15, traded up into it at the 8:30 news multiple times, and then we had our stacked liquidity. We had our London low and our Asian low, both as nice sell side liquidity targets. Obviously we have previous day low and PM session down there too, but we don't need to reach that for today. Now the reason, there's a couple, so that's the framework, I guess, the IRL to ERL, premium to sell side. We also did not have a huge range or seek and destroy conditions prior to 8:30 or prior to 9:30, so that gave me a little bit more confidence to just taking a quick scalp. But like we said yesterday, pre-NFP is going to be very, very difficult, so that's why I'm not even interested in anything after this. Then if you go down to, let me strip it down for 15 down to 1. SMT at the highs, hopefully you're able to pick up on that, between ES and NASDAQ, and between YM. So YM came up and took out their high, and ES was a little bit further into premium than the other two. You can probably see a little bit better on this chart here. So there's your YM SMT, and ES was trading all the way up into this premium efficiency and holding it. Now, last week I mentioned there's about one profile that I like to trade right at 9:30, and that is this specific profile where we have a market maker sell model building we trade down. We have an inefficiency that either on the 15-minute chart or on a lower time frame that price is trading up into right at 9:30. Now you can choose to short at 9:30 in this case, or we have to wait for it to break down and fill a fair value gap, something like that. So this exact profile was mentioned beforehand on, I think, last week's stream. And although we have 8:30 news, you can trust that there's going to be an early entry on a 9:30 day or on a ATM model. So we had everything lining up. We also had this 5-minute breaker that was forming a low, high, higher, high, down, closing candle range, extend that out, fair value gap here, fair value gap here. Candle buys all holding this one. Then we broke down, created another breaker, right? And we have this inefficiency. So I watched it trade up into there, close down below, and then as soon as we started trading away, took a stab short and covered it down at the London low. And this is what the execution looks like here. So short, covered it there. And that's really like that is luck, in the sense of we're lucky we got a setup like this today. Normally, like, that's why I was hesitant to pull up a stream, because I was just going to watch it, and if we didn't get anything the first 30 minutes, I was going to hop off the charts. But very lucky, I guess a very nice profile to trade on a poor day. Now you can see we're chopping around and filling these inversion gaps that we left, but we got the market maker sell model here completed. We're always looking for a market maker sell model or buy model for the morning session. So if we complete it now, right at 10 a.m., we got that first 15-minute candle printing. I don't think we have any SMT at the lows. Yep, ES took out their London low, Asian low, and YM did as well. So there's no SMT at the lows. And if you just got to zoom out, there's your market maker sell model. Very quick, aggressive run, dropping using that 9:30 volatility. Now you can see most likely a seek and destroy kind of conditions, or we just chop around into 10:30 and you have to wait till 10:30 to find a secondary entry. I posted the April 29th and May 1st Notion reviews. So if you go into models and reviews, both of those zip files are there. Just kind of a quick one. There's not everything is annotated in that, but hopefully you can still find some use out of those. And then yesterday, I didn't have a chance to review the PM session, but market maker sell model in here. Someone sent the Empire State Building setup. Wait, what was it? T-Trades who posted that? I don't know. I can't find it now. Anyways. But yeah, just this is why you want to wait for 2:30. Chopping up and down. 2:30 comes in. We have 2-second stage. Trades all the way up. And then just the increase in volatility. You may have been able to capture the only good setup I think was in here was the sell side of the curve on this market maker sell model. Even in here, it's a 940 right before the macro stops. 315 to 345. Entry in there, and then your PM low actually would have been right here. Oh, no, sorry, right here. So I scalped this on a demo, but there's no reason for me to trade PM session. Anyways, so we're starting to sync off here. And normally, by the way, whenever you have a liquidity pool like this, you could see it reaching the new week opening gap. Whenever you have liquidity pools, especially Asian and London, stacked very close together, as long as there's no SMT present, this is normally a very, very good target for the mornings. You can see it on the above us sometimes with the highs, but as soon as you see this, you want to be checking to see, was there a SMT present between ES and NASDAQ most times, right? If London had dropped down here during, on ES, let's say, and NASDAQ failed to, then you would see a continuation profile, most likely an expansion up until 10:30. So you get like a standard midnight open, chops around, London creates the low of the day, expands up, OTE, or just a drop in a discount continuation for New York, and then we stop at London close. And this is where you'd have SMT here, and you'd have SMT here most likely. We're still syncing off going into the 950 macro here. If you were looking, which I would not favor this, but you'd like to see a retracement back into premium. So this inefficiency, I wouldn't like to see just filled. This one is preferred. Maybe even tap to the order block there. Let me zoom out and find a better one. There's a 2-minute fair value gap with the order block. So right in here. But you've got to take what's given on these kind of days. Forcing setups on low probability days and trying to squeeze out more than expected is not the best idea. So any low probability day or any day that you're not confident on the setup, that's not an obvious setup, you either should, in demo, drop position size or scalp it. So have a very quick either point target, it could be 20 points, 30 points, or just have whatever the first objective is in premium or discount or the sell side / buy side liquidity that you're targeting. So in this case, if you would enter it on this gap, let's say 20 points given there, then you have an inversion for value gap on the 1, and then you have your London low given, and then obviously Asian low is a little bit further. But you can see that as soon as we took out the London low, what do you see in this profile here? Sell side to premium IRL. So this gap, you could have, on a lower time frame, maybe scalp that back up to premium, trades back into premium, drops down, holds this, doesn't take out the intermediate term high, and then drops again and takes out Asian low. How much you're willing to allow price to color outside the lines, i.e. allowing price to move within or past PD arrays. That just depends on a lot of factors. It also depends on the time of day. So something like 9:30, if we had a setup like this, that's why I don't really like entering at 9:30. But say you had a setup that allowed for a 9:30 short. Whenever there's a increase in volatility, so at 9:30 or at 8:30, you're going to allow for more coloring outside of the lines. As you get further on into the day and higher quality setups form, you're going to allow for less and less. It also depends on, is there a reason for it to color outside? Like if there's an order block that's above price and maybe we're closing slightly past that for value gap, sure. If there is no reason for price to go past and we're kind of just closing consecutively, maybe one candle closing above a gap, 1 or 2, and as long as it's holding an order block, that's fine. But as soon as we, like if we were to close all the way, say we tapped into this for value gap here, and then we closed above it, I'd be fine with that. As soon as we put a candle really above this here, this is now, I'm considering it as a change in state of delivery because this order block should be respected. That also just comes down, I think, to personal experience, because sometimes you're going to allow for it to color more outside the lines and other times less. And it's not really something I can teach you as a, here's a line that you have to watch, right? Never got the premium run. Still holding this gap. I think probably got 20 points off that too. Yeah. So whenever you're forming a market maker model, sell model, or buy model setup, go back in time and look for all of the inefficiencies in price. So we had a 1-minute gap. Since we had a 1-minute market maker sell model, I'm pulling it from the 1 minute. But 1-minute inefficiency here, this one was filled, and then we had this one. So all of the opportunities for price to slow down, as these are kind of speed bumps in price, so you have to be watching. So luckily we just kind of got our entry short and it sold off. But since we aggressively ran through the inversions, we have to come back up and fill them with candle bodies. So see how now the candle bodies completely filled this range with selling and now buying, and then you can sell off after that. And we don't actually take out this high after we've efficiently filled those. So here is 955. We're still holding this sibi pretty well. Now, downside target, we, I guess, have the new day opening gap and then PM session low. I would find it kind of weird if previous day low is taken all the way over here. This is yes. Let's go to NASDAQ. There you go. So PM session low down here, previous day low. We are tapping into new day opening gap. These are all forms of IRLs. So your new week opening gaps and your new day opening gaps, if you're wondering, you don't have to plot them every single time. But if you wanted to manually plot them, it's just going to be your 4 p.m. to 6 p.m. gap on your new day opening gaps. And then it's going to be your new week opening gaps are going to be on Fridays to Sundays between like this. Your whatever your close was on Friday till you're open, I think 6 p.m. on Sunday. So that's going to be, and then for the new week opening gaps, especially, you should mark out consequent encroachment. So all of these are IRLs, and you'll see price revert back to them a lot of times. There's a whole lesson on new day and new week opening gaps on ICT's YouTube channel, so you can go and watch that. But if you want to just automatically plot them, I use this indicator by Kryptonite, new week, new day opening gap. I'll screenshot this if you want it. Start the buy side of the curve. We could. We do have the SMT with the new day opening gap. I would like the market maker buy model on NASDAQ compared to ES. But I want to see how we react to this sibi here. I agree, Turtle Soup. I think if we leave the lows intact for NFP, we can run those aggressively and complete the hourly market maker sell model all the way down here. That would be pretty solid. We do have to start watching for a quarterly shift, though. You want to see a low put in between last week of April and into May. And we have one over here, which we could pierce at one last time and then see us trade back up into premium. There's your short-term premium. Right. I think we have everything for ATM model too. I would not be trading today, but SMT at the highs, 15-minute candle printed. We're looking for a 5-minute candle after that to print bearishly. You have your 945 candle printing bearishly. You can use that one, or you have to wait for another one. But there's your 945. Trade up into premium there. Not even tapping to order block. And 20 points is almost given. Day like tomorrow, though, NFP. NFP is low probability most times all the way up till 8:30. So if you're looking to trade London, Asian, even before, you can actually can technically trade between 7 o'clock and 8:30. There's a silver bullet in there that ICTs mentioned before. I don't really like trading before a news driver like that. But after 8:30, most times you can get decent runs. You can find an entry between 9:30 and 10 on an NFP day. So we will be streaming tomorrow. Lord willing, everything goes well. And we can find a nice setup. And a lot of times it's going to be like a 50, 60 point run for the minimums. Would you still look short even if would you still like to look short even if we take out the London low? I would be fine with it. Just because we have the PM session low down here. But it is a little scary since we already completed the market maker sell model for the morning. And yeah, since the actual ERL target has been met, you got to wait for all the way down here, which I doubt we'll reach 80 points. It's kind of a decent move for pre-NFP. But there's your 20 points given from the premium imbalance. Pretty solid. Yeah, it really just depends on the day. Like it can be clean, it can be messy. I think we were lucky today because we had 8:30 news. If we had no 8:30 news, then it's gonna be rough. But there's another partial opportunity given there. You gotta take them off quickly. That's another what, 40 points? Like it's actually a decent range. Like 45 points on a tiny scalp there, almost your entire week. Turtle soup. Let's see it. Sorry, could you go through your thought process for today's bearish bias again? I was thinking it may be a little bit too bullish. Got you. So 4 hour and the 1 hour, we have a market maker sun model. That's decently obvious, I would say, right in here, right? So that's the framework. 1 hour, you can see the market maker model framework too. So overall, the bias is then bearish. That doesn't mean we have to target this low, but we have to see then, is there a reason for us to retrace or continue down to this sell side liquidity? 15-minute chart, we had a premium imbalance up here that we traded into, right up here. And we had SMT at 930. So if we're going from a premium IRL, we're going to target a sell side ERL. And we had, luckily, the stacked London low and Asian low down here. So as soon as 930 hit, took out the high on YM. We had the SMT on NASDAQ. That's what the shorting opportunity was down into that London low. And we were selling off aggressively there. We're going to reach for PM session low and previous day low. Much better PA than I expected. But you want to be in a position where you can be wrong and still make money. You have to just manage your expectations, I guess, is the most important part. If you come into a day like today and you know, if you convince yourself that there's going to be a setup and you're going to take a trade, it's a bad idea because then you're going to force something that you don't want to be taking. Same thing with yesterday, going into it and managing your expectation of there may not be a setup today and I'm okay with not taking any trades. And even if there is a setup and it doesn't fit in my profile, I'm fine with not taking any trades. That's the most important thing. Then you can start going into it and maybe scalping or finding positions like this that play out better than expected. Right? Like, yeah, in hindsight, could have held that short from 934 all the way till time, 10:30 to 11, or even down to the previous day low. Don't need to. Something like tomorrow, still have to manage the expectation of there may not be a setup. It's always going to be like that every day. There may not be a setup, but we can expect a little bit better and hopefully hold longer if there's one that's presented within our time windows. And if price action is good, then you know, okay, there's an underlying factor that it's post NFP, it's Friday. We want to see preferably a high probability move and for it to complete the market maker sub model if it's not completed by then. We don't have a crazy range on the weekly. It depends if we sink down here on Friday with the 8:30 news, then you could see TGIF playing. You're going to take your high and low from Monday down to Friday's low and then find that 20 to 30% range. Yeah, JT. On an 8:30 news day, a lot of times you can find entries between 9:30 and 9:50. Really around that 9:40-ish time. There's some solid entries. But obviously you got to be still careful of if there's a Judah swing. It really needs to be a setup like this. Got you, A. We'll see you tomorrow. Hey, scalp's a scalp. 40 points, 20 points. Either way. Order block here and price as well. Premium balance, same kind of setup, right? Could see it reaching a premium, but you also could see it hold this order block. And here's an example why, if it just had filled this imbalance and sold off, and I was looking to go short, it's an opportunity where I would just miss. But as long as you trust that there's the two setups, right? You have either a premium run or a breaker where it doesn't need to return to the premium. Technically a mitigation too, but I won't cover that. You're going to find your best setups in here. So just staying patient. Look how many times that your qualities entries all happen in premium, right? Like here's your dealing range here, premium run, dealing range here, premium, just tags it there. You have an order block, premium run, another premium run there. We don't get it in here because as we get closer to liquidity, we're not going to reach all the way up into premium, but you can see it sink and probably reach previous day low. That completes your market maker sell model. Liquidity is a magnet, right? So as we get closer and closer, there's going to be less of a reason for us to give these stops a chance to get out. So the algorithm is going to get quicker as you reach for that liquidity because it wants to purge it before all those resting limit orders are moved. At least that's the way I think of it. Another partial opportunity there as we take out that low. Hey, all good. Missed the entry, doesn't matter. Yeah, staying flat is better than a loss or forcing something out of. That's why you peg your confidence on your execution and not the P&L. So if you're sitting there and it's uncomfortable, you're seeing it run away without you and you have the discipline to just accept it's a missed entry, I think that's way more important than FOMOing in, for sure. In a market like this, since it broke through so many drawn liquidities, should I still expect the 10 p.m. to 10 a.m. to 10:30 reversal? You could. If we reach previous day low before 10:30, I would be completely fine with 10:30 just reversing and not even creating a new low. This is where this is a situation where if we take out previous day low, I would be fine with avoiding the time. Like that's a decent move pre-NFP. This entry up here, where's the macro entry? There it is. 127. I mean, even down to here is what, 101 points. There you go. Oh, did it tag it? I don't know. There you go. There's the tag. Which would you consider a high probability after 8:30 news? The 8:50 macro or waiting for 9:50? I'll always prefer the 9:50 macro, even if we have 8:30 news. Then the 8:50 macro, sometimes you can get runs that happen into 9:30. I've realized though that a lot of times it's just a 50-50 macro. Like sometimes it'll be good, sometimes there's really no point in waiting to see what you'll get from that, or you get stopped out, or it's just very poor price action. All that stuff. There's your previous day low. Man, it's pretty quick today. Here's your previous day low. This is a solid one to screenshot. So if you're taking notes, which hopefully you are, make sure to go back and screenshot this. So this is a situation where like I would not feel super confident holding until 10:30 because that's a 127 point move. That's 2 weeks worth. So to answer your question, I just avoid the 50 macro now. I've tested it. I've woken up at 8:30, tried to trade the 850 macro. It's just not my preference. I feel like a lot of the moves still happen between 9:30 and 10:30. And as long as you can understand what's expected and how to get in, manage your position properly, that's the one I'll always use. Yeah, 127 points is kind of crazy. Would it be wrong if I expected a reversal at 10, but it hasn't taken out the previous day low yet? I mean, you can expect a reversal here. Like you can expect a reversal anywhere. I wouldn't like it to just reverse and take out these highs now. It could, but you also have to play what's given. So don't have, it's hard in the beginning, but don't have a reversal mindset where after this, I'm gonna look for reversal. Sometimes on an expansion day like this, you have to just take it as it is. So like in this situation, I wouldn't like to trade a reversal all the way back up because you have to wait for a decent amount of time for it to trade all the way through this order block here. Then you have to wonder, okay, is it trading through this to tap back into premium and then put in a new low at 1030, or is it going to truly reverse? All that stuff is just, I think, too much, and it's going to be too delayed where you get further into the session, lower probability entries happen. Yeah, there's your ATM model playing out once more. Telling you. Yeah, if you sat out, give yourself a pat on the back too. It's good seeing everyone's slowly increasing the discipline. Like that's the most important thing to me. I don't really care if you make 6,000 a day, but as long as you get out of this, that it happens every day, but you can just sit out and feel comfortable with that and know that either tomorrow or next week it's still going to be there. And we use the same kind of logic. That's so much more important because then you gain confidence that no one can take away from you. You don't pin your confidence on, am I making money or am I losing money? It's there every day. You just manage your expectations, manage your discipline, and you have an ATM. That's why it's called that. What's the difference between Wednesday's non-farm payroll and Friday's non-farm payroll, and do you avoid trading both days? So NFP, the real NFP, will always be on a Friday, and it's always on the first Friday of the month. So next month it'll probably be on, like you can pull up your calendar. It'll be on the 7th of June. It'll be on the 5th of July. So if there's an NFP on Wednesday, like I don't know the exact name of, let's go, let me check the ADP non-farmer employment change. The NFP, the real one, will always be called non-farm employment change. And you'll have a couple news there. So as long as it's not that, you should be fine. Sat out. Nice, nice. I mean, just think of it as like this, right? Like you sat out this. Maybe you missed it, feel uncomfortable. Are you uncomfortable and upset that you missed this 322 point run up here? Because in the PM session, you could have went long off this turtle soup over here. That's the kind of way I think about it. Where if you're sitting out and it's not in the model or you don't feel comfortable taking it, it's just like this. It's just like the London session. You can find so many setups in the past where you didn't get in and it provided a nice run. This is the same exact thing. But what happened after the PM session? There was a setup today. What happened after London session? There was a setup in the morning. So now you can see the candle wick here closing above the previous day low. Now on the 15-minute chart, this is two kind of, it's actually not a bad sweep. We don't have any inefficiencies over here, at least on the hourly. On the 15-minute, there's nothing there either. So now you just got to be really careful. I want to see how we react to this order block and the inefficiency. Now you have two situations. It could come down and take out this low on a time scale or a time priority, or it may reverse and basically clear out this original consolidation up here, which would start the market maker buying model. I don't know if you can see it, but there's a original consolidation, first stage, second stage, smart money reversal. Then you want to see the breaker, first stage, maybe an internal liquidity sweep, something like this, right? Maybe like this, and then back up to the original consolidation. And we have 15-minute imbalance over there too. So that's like your best case buy side of the curve scenario. Let's see, original consolidation over here. 17,555 even. And you can see the 1 minute original consolidation here, right? There's a lot of stuff. Let me remove some of this. I'll keep that one. If this is original consolidation on 1 minute, what time frame do you want to see a swing high or fair value gap form on? 15-minute pairs to the 1 minute. 1 minute pairs to the 15. So on the 15, there's going to be imbalance up here. And there's your imbalance right there. So now you have, this is why technically it's always going to be ERL to ERL, because inefficiencies on lower time frames will have original consolidation like this. So we could go from sell side to premium, but on a lower time frame, you have original consolidation. That price is going to offset their positions from here. Gonna fight someone. Yeah, 100%. Seen this so many times now. You know it's going in any week. Oh, going into any week, you'll find at least one setup, and that could be your whole week, right? Yeah, I mean, even in the past 3 weeks, we've probably seen 10, 7 to 10 different setups, and you only need one. You just need one. 50 points is your whole week's model. So if you can find a 50-point scalp on one of those days, I mean, think about this week. We basically saw it almost every day this week for the most part. So if you miss one, it's like, okay, there's the next day. There's the next day. Used to get mad when I miss setups. Now it doesn't bother me as much. That's good to hear. It is such a toxic mindset. Yeah, I feel FOMO, but FOMO I think stems from a lack of confidence. If you're confident in a model that's going to be there, you don't really feel FOMO when something like this happens, or if you just miss out on a setup, because you're so confident in your ability of performing and executing when it's there that it doesn't even matter too much. I think there's a lot of FOMO when you don't know what's going on, or when you don't have your own model. You feel a lot of FOMO because it just feels like you're missing out on everything, or someone else is doing better than you, or they have a better model than you. Chaos, if you go into, I think it's application settings on Tradeovate, and you go to add-ons. Here, let me. So it's application settings, then to add-ons, and then it should be a trading view tab. And then you have to restart your Tradeovate, and then you go into trading view and use your same login. You should be able to access it. Otherwise, you gotta just use Tradeovate, which isn't too bad. Yeah, it'll always be uncomfortable. Like, it'll always hurt inside a little bit. But it's either you feel that pain of discipline, which is probably what you're feeling right now, or you feel the pain of regret by pushing the button and either taking a huge loss, or you win, which is a problem because then it feels like, oh, I did something right. And then you just push away that point of being consistently profitable even further and further. But as long as you can sit in this and you feel this is what it feels like to be disciplined, and you're like, oh, it's not that bad, it's just a little uncomfortable. As long as you can sit in that and deal with it, you'll be successful in this. The problem is when that uncomfortable state feels like it's too much, and you have to be impulsive to get rid of that feeling, and then you click the button. Right. Yeah. Deal in probabilities. So as long as you follow your rules, can't complain. What would happen in price to make you take a long? So I would need to see a closure above this up closing candle range, which you would look to see form as a breaker. I would need to see it trade down to the breaker and hold it, and then look for a fair value gap setup long into this original consolidation. But That being said, it is later into the session, and we already got a nice move lower. Even if you don't trade on any day and you tape read or predict where you think it may draw to and hit your draw like today, right? Yeah, exactly. That's why yesterday, like, we still had a stream, was still drawing out levels and things like that. I didn't enter on a demo on the stream or enter outside of it, but it still helps you build up your tape reading skills. And even if it's a low probability day and you're just tape reading it, then you know, okay, this is what it feels like, this is what it looks like to tape read where it's just chopping or if it's taking stops over and over and over again. Oh yeah, you may have to just send a DM to the support team or something. It should be there. Unless your whatever prop firm you're using doesn't allow TradingView, which would be kind of weird. The time element would just be like the only time element that's left in this would be we put in a new low between 10:30 and 11 because this low here is at 10:09. Now the reason that it wouldn't be necessary is because we have choppy dates or we have poor probabilities we're expecting today, so it doesn't need to do that. And we have 8:30 news, which then can shift the time scale back an hour. But if you're looking at just a strict time setup, then you want to see this low going back. But I would prefer if it went from higher time frame sell side back up to premium. So I would like it to take out this high. 10:08 1 minute inversion could be used as a, yeah, I would like that. I would like to see it potentially tap into this order block. And we also have a fair value gap here, if you can see it. That lines up with price. So just watch to see. If it's in line with your model, then yeah. We had a 5-minute candle printing bullishly. I would still just kind of scalp that though. It's 45 points, 40 points all the way up to that swing high. Also could be using this as an order block if we trade through it. Tap back in. A whole lot of stuff. Anyways. Looks good so far. Anyways, anticipate that market maker buy model. We'll go ahead and wrap it up there. I'll send the review, the ATM model review into, actually no, today was pretty solid. So I would say try and do it yourself. If you have any questions or problems, shoot me a DM and then I'll send you over the zip file, but I won't post it into models and reviews. That'll be the homework, I guess, for today. So yeah, stream recording will be posted later today. As always, if you got any questions, shoot me a DM. Got a little backed up, but I'll try and answer those all today. Appreciate you guys joining. Hopefully found it insightful. And we will see you guys tomorrow morning at 9:30 sharp for the stream. So take care. Enjoy yourself. See you guys soon. Peace. leave the stream on a little bit longer so you can see you reach up into this OG console. I'll put an alarm here. If you come down and take out this low too, I'll be pinged on my phone. So I'll let it go. If you want to leave the stream, turn it off, you can. But I'm going to let it play out. Either we take out this buy side or we'll come down and take out this low. And if we take out this low, we'll take out that one. All right, you could probably just pull this up on your chart later. It's getting closer to 11. Could see this as a market maker sell model too. Anyways, peace.